Sir, am I audible?
Hello. Yeah, I can hear you.
Yes, sir. Good morning, sir, and one and all present here. On behalf of Institutions Innovation Council, Rajki Engineering College Banda, I welcome you all to our today's session. I extend a warm welcome to our eminent speaker, Mr. Raghvendra Verma, sir. Sir is currently the founder and his bachelor's in engineering from MVJ College of Engineering. When it comes to assisting and guiding the young entrepreneurs, Sir is one you can always see guidance from. Today, Sir will specially guide us on the topic of angel investments or VC funding opportunities. Now, I would like to request Sir to kindly unfold his views on the same. Over to you, sir.
Hello. Thank you, Andhra, for introducing me. And I will be very thankful to Team REC Banda allowing me an opportunity to speak on the topic angel investment and VC funds. And I would like to share my views on the base of practical experiences which I've experienced. Okay, so before beginning with the session, I would like to give us some very small brief introduction about myself. Okay, my name is Raghvendra Verma. I'm a founder and CEO of DIY Schools, and before this startup, I have worked for a startup, another startup called Education Hack. It was also into the field of like edtech. So before going into the startup session, I was like into more into working into the civil construction industry, and my previous employment was Oyo, where I was working as a transformation lead. By degree, I am a engineering professional turned into an entrepreneur, and I hope like I will be doing great in this field. That's all about me. I would like to begin with the presentation now. Hope everyone is ready over here. Shall I continue?
Yes, sir.
Yes, sir.
Hope everyone can see the screen right now.
Yes, sir, we can see it.
Right. So today's topic is angel investment and VC funding opportunity for early stage entrepreneurs. So this is a very interesting topic according to me, and I think many of the students around REC Banda would be looking for like getting a good answer on the same topic, because I can see myself when I was into engineering, and I saw like many students who were very creative and they wanted to start their some kind of venture or firm, but they needed more guidance and more experience, like how to begin with and what are requirements to begin start a venture. So today I'll be discussing for the same on this session. A brief about the contents which I'll be going through in this session. So we'll begin with the introduction, where we'll be giving introduction on angel investment and VC funding, and there what are the key differences between both, and what are the types of fundraising will be our second slide. Okay, where will be different like a discussion on the different type of fundraisings and what are the pros and cons of each. Then next will be what are the eligibilities and hacks which is required to raise a fund for any kind of entrepreneur. And the last slide will be like on the base on topic like popular funding programs and its scenario use cases, and we'll be also discussing about like what are the fund sizes for each. And at last, I'll be introducing about my startup DIY schools also, and its synergies and its internship opportunities which we can see over here. So let's begin with the introduction of angel investment. Okay, before I go through it, if anybody wants to ask any question, they can stop me and they can ask me any question if they have from their end. Okay, so let's begin with the angel investment. This is a very popular topic. Most of us seek like what is angel investment and what are the like key factors to become an angel investor or to receive an angel investment. I hope like everybody have this question in their mind who have joined this session. So an angel investment is an investment received from any kind of individual or independent investor. It is ideally from the people whom you know or whom you have built a network and they trust on you. So on that basis, you receive angel investment. It can be also from like your family, friends, or your social network, and these people know you personally and they have a trust on you. So they are ready to make like they are ready to invest their hard earned money on you, to in a expectation to grow their money. So an angel investment is all about like receiving a fund from individual and independent investor. And what happens in angel investment, like usually you receive support in the initial moment when investment are ready to back you. But it's not like angel investor are not much interested in like company organization, like organization and restructuring of the company. So they are less into the reorganizing and the company structure, but they are more into like interested into growing their money. So that is basic about angel investment. I hope like everyone is clear with that. And our next topic will be venture capital funding. Okay, a VC funding is capital that you receive from any kind of investment group or corporate group that work with startup and business at a later stage. Ideally, I'm talking about most most use scenarios. The VC funds are usually deployed on the startups which are on the traction, expansion, or scaling stage. They usually don't invest in the early stage because they want to see the numbers. They want to see the founding team, like if they can grow and actually can they can like help them to grow their money. So the risk on the venture capital is quite less when compared to angel investment, because angel investment is done in the very early stage. So the risk is high, and where the risk is high, the reward will be also higher. So the angel investment is a high risk and high reward game, more than venture capital funding. So that's all about venture capital funding. I hope it's clear to, and if anyone have a question can have. Okay, our next slide is on the key differences between angel funding and VC funding. Okay, most of us would be interested to know what are the key differences. So today, in this slide, we are having six key differences between the angel funding and VC funding. Okay, angel funding, angel investments are from single or independent investor, as we discussed, and VC fundings are usually from some kind of investment group which are regulated by SEBI under their guidelines, under their norms. Okay, so angel fund, who can like avail angel funding? Angel funding is good for like early stage startup founders or startups. Okay, whereas VC funding, it is good for like companies and founder who are on the later stages, like they are having some kind of traction, they are getting some kind of sales, they are making some money in the market. So VC fundings are good for late stage companies. And coming to the ticket size of the investment, okay, in the case of angel investment, usually the ticket size is smaller compared to the VC funding, where it could range from 10 lakhs to 10 cr. And in the VC funding, as per norms of SEBI, the minimum ticket size should be 10 cr, and it should be start from 10 cr from any investment group for a startup. And this invest and coming back to the angel funding, this investment is all about, as I told you, like it is a more of a, like high risk and high reward game for any kind of investor who is a like angel investor. And because they are investing on you on a very early stage, so on a early stage there is a little bit less data, like how well you can perform. And there is a like a little bit information like if you can excel or not. So that is a high risk game for any investor. And if it is a high risk game, the reward will be high because they are they will be taking some kind of equity. They are going to take some part of share in your company at a lower valuation. So angel investment is a like high risk high reward game, whereas VC funding, it is at lower risk, since they have seen your company sales data numbers. And numbers are very are the factors which always speak the truth. Okay, and where in the case of angel funding, it is a mostly like financial assistance, and it is less into the mentorship or company restructuring, as I told in the previous description. So, like if you are looking for someone who can provide you financial assistance only, so it is good to reach out angel investor. Whereas in the like venture capital funding, it is more like along with the raising funds, you will be also getting a huge mentorship with some corporate groups who will be also like helping you with the good contacts with the industry experts, and they will be also involved in taking your board member seat. So they will be involved in like company organization restructuring and whatever all key factors that are required to like excel well. So they'll be like taking part in all of the company roles. And the last point should be like in the case of angel investment, there is almost low or nil due diligence. So it is good like if you don't like paperwork, so angel investment is quite good in that case, because it involves like very less due diligence. Where in the case of like VC fundings, the due diligence is quite high, since like the fund is is a larger investment, so people tend to have a legal rights on their funds, and they want to go with the more towards the paperwork and documents. So these 6 points are the key differences between the angel funding and VC funding. I hope like everyone is okay with it. Okay, our next slide is on the types of fundraisings. Like most of us will be having a like common question in their mind, like what are the type of fundraising we can do for our startup if we are making a like we are starting a new venture. So what are the types of like fundraisings? So you can like raise fund basic basis on the equity dilution for your company. Whenever you incorporate a company, okay, so you are having equities, that is shares, okay, and you can raise fund by diluting some of the shares of your company, and that comes into like equity dilution fundraising. And the second type is debts. Debts are usually like kind of bank loans, which you can take from your nearest branch or the banks who are interested to give debts. Okay, so yeah, I usually our interest is levied on the debts, so which you have to repay on a timely scheduled manner. So usually debts are taken from entrepreneurs or startups who are very much interested, like who are having very high confidence on their product or their business model, and they don't want to dilute their share, because dilution of the share is something very important for any kind of founder. Every founder like to like protect their equity, and they want to do the less dilution as much possible. It is very important. Like we have seen some of the cases in the some of the startup, like they were in like kind some kind of rush to raise the fund for their startup, because they need money to excel or make some expansion for their startup, and they ended up losing a lot of share or making huge dilution for their company at very early stage. So that is a quite common case. So its alternative is debts. So with the help of debts, you are not going to dilute your company share, and you have to repay that amount with an interest at a particular schedule. And then next like fundraising is like it is done from the government grants and funds. This is a very good initiative by government of India, under way several programs. Like currently we are going with the start in up startup India seed fund program. These are the government grants and funds which allow you to some get some kind of financial assistance and mentorship from some of the incubators like which are deployed from the government of India. So these are more on not, they are not going to take your like equity dilution, or they are not going to make any kind of equity dilution for your company. So this is a very good like a type of fundraising which you should look at. Next is like crowdfunding. Crowdfunding is a like a method of pitching your details about your business model on a public platform, where everyone will go through the business model of your firm or venture, and after that, if it is attractive to them, so they can invest on your venture. And for that, you are going to like allocate some kind of part of your company for crowdfunding. So crowdfunding is a very common practice which is done on various public platforms. And then last is like social network and peer-to-peer fundraising. This is something very quite like fascinating for me, because I totally believe, like, if you are an entrepreneur, it's very important that you should have a very good soft skills. You should have a skills to network with the people, and this kind of fundraising you can only do when you are like good at these skills. So you can raise your fund from your social network, like people whom you know, and you think some kind of people who are having similar kind of interest. So you can reach them out. You can like explain your business model and how it is going. How, like you can tell them how you are it is going to raise in the future, and what are the end result of that, where they can land up after a few years, and how you can help them to like multiply their money. So social network of peer-to-peer fundraising is one another fundraising method which is idly practiced. So these are the common fundraising practices which I have included in my slide. If anyone has a question on this, they can ask. And uh, our next slide would be on like eligibilities and hacks to raise a fund. Okay, so we ideally have a question. Okay, I want to raise a fund, but what should be the eligibilities and what should be the do's and mandatory parts to raise a fund? Yeah. So there are although there are like a lot of points, but I've taken some five important points which I believe it is very important. Like if you are going for angel investment or VC fund, so you should be doing your homework on these 5 points. So the first is firm incorporation. A firm incorporation is very important point, because once you are raising fund, so the investor would like to have a legal rights on his money for your company. So if you are not a incorporated fund, so they might end losing their interest because they do not have hold on their money, because they are not documented well on the papers. So that will be some kind, they might lose their interest to invest in your firm. So first thing is you should get your firm incorporated, and this firm incorporation is of several types. One is like sole proprietorship, partnership firm, OPC, one person company, LLP, limited liability limited liability company, and the one is private limited, which is most favored one. Private limited company, because you have a equity over there. So whenever an investor is ready to join your company, so you can dilute your number of shares on that thing. So that is a very common practice for the. And the second point, which is most important, eligibility for raising a fund, and most of the smart money they prefer this point only. They tend to invest more on a founder or the founding team more than their team, more than their business model, because they believe founders and their team more than their business model, because they believe founders are a kind of force in the back, which is going to multiply their money. So you should be having a team which is well balanced. They are having high experience, and they can run a good they can run the venture very good. So founding team is very important. That is the second point for the eligibility. And the next point is the problem statement. Okay, everybody likes to have a some kind of startup. Most of the people think like they want to start, but they must understand what is the problem statement they are going to solve. Because the bigger is the problem statement, the bigger is the solution. That means you are going to earn more, or you are going to build a large business on that basis. So the problem statement is a very important, and that should be like done on the basis of research and surveys. You should do market surveys. You should reach out to your customers, and if you should organize a session with them. You should ask, this is the problem statement for you. If you, what are your problem statement? If this is a problem statement, I'm going to provide a solution. Are you ready to pay for it for me? So this is a kind of market survey that is very important, importantly done for any kind of startup when you are at very early stage. So you should do a market survey, and you should try to identify the problem statement, the correct problem statement, and the correct solution for it. And this is very important point for any kind of venture building. The next point is, if you are looking for like fundraising, try to get some traction means like early sales number. Okay, because okay, it is okay, like you have built a model, your idea is good, but some most of the times, not sometimes, most of the times the investment team is very much interested. They want to see, okay, you are a good founder, you have a good idea, you have a good product, but are you a good sales personality also? They want to see that thing also from your side. So building attraction, that is very important for your like early stage in like a firm, where you should get some kind of sales numbers on the papers also. So that will help you like proving your concept. You can prove your concept like, okay, this business model is fine because I have got so much of sales, so much of revenue. That means my problem statement is correct, and I build a like correct product for it. So traction is very important. And next eligibility will be a MVP and a presentation. Like while you want to raise a fund, so you should be very sure like you have built a minimum viable product for your early stage venture. Okay, and you should be like having a good presentation for it, because usually what kind of presentation, if it is you are get good at presentation, so that can win deals for you. And fundraising is all about like how you present your startup in front of others. So a good MVP presentation is equally important as an eligibilities and hacks to raise a fund. So these are the points which are covered into the eligibilities and hacks for fundraising. Okay, our next slide is popular funding programs. Yeah, like most of us will be very much interested, like what are the most popular funding programs, because they want to know like what are the opportunities, and like what are the, like suitable for them. So the first is like Startup India program. The Startup India is a program initiated by Government of India to provide fund for early stage startup. Okay, but why of India is investing like on startups? This should be a question into any kind of entrepreneur's mind. Because see, the government of India want to like invest some kind of money from their budget. Okay, and this is idly for, if they are looking to like improve the employment in the country, or they want to improve the economy of the country. So for that points, they are ready to invest on the startup. So you should make sure like if you are running venture, if you're starting a startup, so you should be creating a huge employment. That is the first essential, and the second point is it should contribute a lot into the country's economy. So that 2 points will be sufficient enough to like you can raise a fund from Startup India programs. Like there are several kind of Startup India under programs under Startup India's program. Like there is Startup India Seed Fund program, Start in UP, and a lot of there. You can visit Startup India portal to get the updates on the what are the current programs active, so you can raise fund on that platform. The second is Pradhan Mantri Mudra Yojana (PMMY). It is a scheme for providing loans up to like 10 lakh to the like non-corporate or non-farm small micro entrepreneur. This is you have to like present some kind of documents to them, and this is a ideal kind of funding program which is practiced to raise fund up to like 10 lakhs. And some of the popular funding program which is present at the global level is Y Combinator, and this is also one of my favorite funding program. Y Combinator is a created model for funding early stage startup, and they are like investing like twice in a year. The best part is they go through a thorough procedure with your company. They tend to see every aspect of your venture, starting from your team. They see how professional you are, how well prepared you are for your company, and actually you will be able to do it or not. Once you receive a nod from Y Combinator, like a funding program like Y Combinator, so you will get a huge kind of assistance. Like they are going to like set up your branch into outside India. The first thing, they are going to involve in the company restructuring. They are going to tell you the do's and don'ts of the startup industry. So Y Combinator is a very popular funding program. And another is like Sequoia India Search. Just like the Y Combinator, Sequoia India Search is also a program where you can raise your fund, and by filling up their form, telling up the details about your startup, and how you can help them to multiply their money. So Sequoia India Search Program is another fundraising program which is quite popular. And next one is 100x VC. This is a quite popular funding program in India. They are funding for the startup using iSafe notes. This is a method iSafe note method is they do go for the documentation on the later stage, and initially they invest some kind of money on your startup. And the next what are the ticket size for this 100x VC? That ideal ticket size for any kind of investment that is done on 100x VC is 1.25 cr, which is currently going in the class 8 investment. And the next and the last one is pitching on the shows. Yeah, like couple of us have seen like there are some kind of show where they can pitch about their startup. They can tell their product. They can tell their numbers and what are they are performing, what problem they are solving. On that basis, on the live session, they can raise funds for their program. And this is ideally done or practiced on for the cases of equity dilution. So these are the funding programs which are popular right now, and you can look out. Fine. If anyone have a question, they can ask anytime. Next, in the next slide, we are going to discuss about some of the use cases of fundraising. Okay. Huh. So this is our first use case. I think most of us have gone through Shark Tank India. This has been a very popular show right now in like last 1 year. Everybody has been showing on like Sony TV. So Shark Tank India is the most telecasted show in India in last 1 year for any entrepreneur who wants to start their business. So they must have gone through this show. So till now, the starting India has received 62,000 applications to pitch about their startup on the show. Out of which 198 business were selected to pitch their ideas to the shark, and out of which 67 businesses got the deals for their sessions. So this is the data for the Shark Tank India, which is a live pitching session program to raise fund for your venture. And the next is horses stable. This is another Indian program which is to raise fund for Indian startup, Indian founders, and they can idly reach out. I hope like most of the people have also gone through the horses stable program. And till the date, the horses stable has just, helped 30 companies getting funding. And in the next 12 months, they are aiming at like investing at 200 startup in India.